Thanks guys, hope you're doing well and good. I'm pretty sure you all are aware of the term accounting, yeah? What is it? It is a basic activity of data entry, right? By data entry, I mean bookkeeping. That is a systematic procedure that a company follows to record their financial and non-financial transactions, yeah? And out of all this recording, what do they get? They get a set of books, yeah? Books like journal, ledger, and certain statements that shows their incomes, that shows the expenses that they have incurred, the assets that they own, and the liabilities that they have created throughout a period of time. So this activity of measuring, yeah, processing, recording, and communicating certain financial and non-financial transactions of a concern is called accounting. Yes, so it would be fair to say that this whole activity of accounting is primarily focused on recording transactions, and this process of recording is done on a systematic, organized manner, and also based on each company, each concern, there will be certain laws that will guide the companies to make these recordings. Yeah. So in short, this is a law-driven, organized, systematic system wherein a concern or a company records their transactions in a specific manner. That is accounting. So as far as a company is concerned, their managers or owners are concerned, this activity serves multiple purposes. Purpose number one, as I previously mentioned, it satisfies a law. Yeah. Purpose number two, see, I told you, based on these recordings, we prepare certain books and statements. Books like journal, ledger, statements like profit and loss statement, balance sheet, etc., etc. So based on these statements, the owners can track the company's performance, how well they are doing, what all have they achieved this year compared to the previous year. So that kind of comparison can be done as well. So the first purpose was to serve a law. Second purpose was to serve the company's management. Right. Now, when it comes to serving the company's management, the mere activity of accounting has certain limitations. I'll explain it to you with the help of an example. So in this particular example, I'm going to give you the analysis of a tire manufacturer. So it's going to be like a case study, a very basic, simple case study analysis, all right, of a tire manufacturer. And what we are going to analyze here is the raw materials purchased, the raw material cost incurred by a tire manufacturer in a particular year of functioning. Okay, so in this example, us, that's a tire manufacturing company, let it be say XYZ company, we have three suppliers of raw material, A, B and C. Three parties who supplies raw material to us, and our major raw material is rubber. They supply rubber to us in 10 kg lots. Alright, so each supply is a lot of 10 kg. So A supplies this 10 kg lot, this 10 kg rubber lot to us for 100 pounds. Alright, 100 pounds. B supplies to us for 90 and C supplies to us for 80. So right off the bat, which supplier seems the most attractive? Because without doubt, a company functions for earning profit. So lesser the cost, more the profit. So from a basic analysis of the data from the financial statement, we are able to understand that C is the most economic supplier because they supply to us for 80 pounds for 10 kg lot. So C is the most value effective, cost effective supplier. Yes? Alright. So that is the analysis that we can make out of the financial information. Now I'm going to tell you one more thing. We all know that all the things that we find out there in the market have multiple quality based versions of the same. Yeah? See, this shirt that I'm wearing, I can find this same shirt, a similar white shirt which is of a far more superior quality and one which is far more inferior in quality. So the quality differentiation brings about a lot of different variants of the same product in the market. So that same thing is applicable to rubber as well, yeah? So assume the quality of the rubber supplied by A, B and C are a bit different. Alright. And we are going to analyze something based on that quality right now. So out of the 10 kg rubber supplied by A, we were able to make 40 tires. So tires made. Tires made. Out of A's 10 kg, we made 40 tires. Out of B's 10 kg, we made 40 tires as well. Out of C's 10 kg, we just made 30 tires. Alright. Now the story has changed a bit. C doesn't seem so attractive because for 80 pounds we just got 30 tires of rubber. Whereas an additional 10 pounds gave us 10 more tires. But now we can see that there is a major difference in quality between the rubber supplied by A, B and C. A and B gave us more or less a similar quality rubber because we got 40 tires out of 10 kg rubber, whereas C, we just got 30 tires. Alright. So now if you analyze the 10 kg rubber cost, that is 100 pound, 90 pound and 80 pound for A, B and C respectively, were an analysis of their inputs. We analyzed the finance part of the input. Yeah. Now we have something related to the output as well. The tires made. Say each tire we sell for 20 pounds. We sell each tire for 20 pounds and as a result, we get a sales at 20 pound per tire. We sell A for 800, fair enough. We sell B slot for 800. We sell C slot for 600. Yeah? Pretty clear? Fine. So right now what do we have? We have the financial aspect of the input and the financial aspect of the output. So based on this input-output data, we can work out something. That is how much of an output I got out of the input. Yeah? And based on that, we can make a better calculated decision. Yeah? I'll tell you what I mean by that with a simple analysis. An analysis of output to input. Analysis of output to input. Alright. So output 800, input 100. So for every pound, I got 8 pound as income. So I spent 100 pounds, I got 800 pounds as income. So we can say that there is a ratio of 8:1. Yes, clear? For B, we got 800 pounds out of 90 pounds spent. So clearly more efficient and economic than A, right? So 800:90 would give us 8.88:1. That is for every pound spent, I got 8.88 pounds back as income. For C, it is 600:80. That would give us 7.5:1. Now tell me, what do you think? Which supplier is the most efficient one? Which supplier is the most economic one for the company? Is it C, B or A? We previously said C was the most profitable one because C sold to us for the most cost-effective price. But right now, we understood that even though there was a cost-effectiveness when it came to C, that cost-effectiveness came at a different cost of loss in quality. So now you tell me, which supplier, A, B or C, is the most useful or the most profitable one for the company? B was the one based on purely the input data. Yeah? Because B was the most cost effective one. They sold to us for 80 pounds per 10 kg. But when we went to a deeper analysis, we found out that even though there is a cost effective benefit when it comes to purchasing from C, in the long run, it's not so beneficial. Because for every pound that I spend for C, I only get back 7.5. And on that basis, we can say B is the best one. B is the most cost-effective supplier. Yeah? I'm going to give you something else as well. See, out of the tires that I sold, certain tires were brought back. That is, I had some sales returns. Some of my customers returned the tires that I sold. So when I checked the financials, I found out that the sales returns were in this following manner. Out of the tires that I sold to A, 2 tires came back. Out of the tires that I sold to B, 6 tires came back. So that is, in value, that would be 2 into 20. 20 is the value of a tire, right? 40 pound worth tire came back, and here 120 pound worth tire came back. So that puts us in a net position of a net earning of net sales of 800 minus 40, fair enough, that is 760, and 800 minus 120, that is 680. Fine. Now I am going to analyze this output data, the net output data, again with my input. So I am bringing in a second level of analysis. Analysis number 2. Analysis number 2. Here I am analyzing 760 to 100 and 680 to 90. And in that manner, here I got, for every pound spent, I got 7.6 pounds back. So a ratio of 7.6 is to 1, yeah? And here I got 680 pounds for 90 pounds spent. That is 680 is to 90, that will work out to 7.5 is to 1. Now what happened? A is the more economical one. A is the more profitable one, right? Because A, after all the sales and the returns, gave us the best income, gave us the best figures. For every pound spent, I'm getting 7.6. Whereas for B, because of the high return rates, for every pound spent, I'm only getting 7.5 pounds back. So that means A is the most profitable supplier out of the 3. See how our decision changed from one analysis to another? Yeah? What did we do there? All that we did was, we went into the financial data, we analyzed them, yeah? Interpreted them in a particular manner, and each analysis brought in new information. Yes, and based on this new information, it resulted us in changing our decisions. Yeah? And this right here, this activity of identifying the required financial data. We identified all the required financial data like the cost of rubber, the sales achieved, and the returns that came in. Identifying financial data, analyzing them in the required manner. We did 2-stage analysis in example, right? And after this analysis, interpreting them as required. We interpreted them as ratios, yeah? This activity of identifying, analyzing, and interpreting financial data to aid decision making is called management accounting. Management accounting. So what did we do here? We went to the financials. Yeah? We went to the financials and tracked the financials all over the activity which generated the financials, the figures in the finances. Yes, based on this tracking, we created an interpretation. Yeah, out of this interpretation, we made decisions. This interpretation resulted in decision making. And this activity right here, this process right here is called management accounting. Pretty simple, right? So simply based off the explanation that I gave you, you might have got a pretty good understanding of the differences between accounting and management accounting, yeah? Accounting was law-based, systematic, organized manner of bookkeeping. And management accounting was nothing but analyzing whatever that we recorded in our procedure of bookkeeping. So while analyzing, we didn't follow any law. We didn't follow any statutory provision. All that we followed were some logical principles, some rules, and some analyzing methodologies. So all that you need to get there is just that logic, the logic behind all those methodologies. You do not have to study by heart any legal provisions or rules. Nothing of that sort is applicable for managerial accounting. Got it? Now the best part by being non-statutory is that This activity of management accounting can be applied worldwide, pan industries, pan companies, pan sectors, doesn't matter. The same principle, the same methodology, the same calculation techniques can be applied everywhere. Whereas accounting, no. Accounting in India is different from accounting in the UK. It is different from accounting in the US. It is different from accounting in Africa, based on the laws of the land. This span the globe. Everywhere, the exact same thing is applicable. That's the best part about management accounting. Despite being a globally accepted, globally applicable process, students refrain from learning this much. The simple reason to that is because they find it hard to get the logic behind the rules and principles that I had mentioned. I told you right, there are simple logical rules and principles behind management accounting, and if you get that, it's done. And students find it hard to get these logical rules and principles in their head correctly. That's mainly because this is a new subject for majority of you guys, and secondly, you do not get the right coaching that you require. See, think of it like this way. Management accounting, learning management accounting is like learning driving. So to properly drive a car, all that you need is two things. Number one, understand the relation of accelerator, brake, clutch and the gearbox. Number two, understand how the steering works in reference to the perimeter of the car. Now, if you get both those concepts into your head, driving any car would be easy. It doesn't matter if it's a Honda, a Suzuki, a Lamborghini, Ferrari. It is the exact same concept everywhere. All that you have to do is get the concept of accelerator, brake, clutch, gearbox set and understand how the steering works in reference to the perimeter of the whole car. You are good to go. Yeah? That's the exact same thing I'm going to do here. I am here to help you understand management accounting in its truest, most simple, most interesting form. I'll break down all the concepts of management accounting to the most easy to understand, brief, concise, yet comprehensive manner such that learning management accounting for you guys will be a walk in the park. Myself, Nishanth Reghunath, a cost and management accountant from Cochin, Kerala by profession, and above that, a teacher by passion. Me and my strong team of enthusiastic tutors are here to provide you with the best. I assure you, we will do to the best of our abilities to make sure you will have the best experience learning with us. So come join with us, enroll with us and embark on this amazing journey wherein you will learn this beautiful language of management accounting. See you inside. Take care.